Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. This is all enabled by me using margin against my growing assets to pay all my bills, instead of using my paycheck to pay all bills first, then investing the rest. I invest 100% of my paycheck every week. It feels like my portfolio is my employee in a way, working for me and earning an extra salary. He's going out there and making an extra 66.8K for me every year in my sleep, essentially. So it's like just some really nice passive income. It's been 58 weeks since I started this strategy, and I'll go into all the details of my slight underperformance this week, or not even slight, quite a bit underperformance this week. I'll be breaking down how I underperformed the S&P 500 with my negative 1.04% total return. I'll also check in with my margin health, all my dividends received, and finish with the finance channel of the week, which will be almost wealthy this week. All that said, you'll get radical transparency on this channel, whether the market is up or down. You'll see all the real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all this transparency, give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you read this full disclaimer. As far as my weekly flow, won't go into it. If you want a detailed breakdown of this, check out the video at the top right where I do a big deep dive. And let's just get started. So if we pop over to Robinhood, we can kind of see that ended the day on Thursday on a big red day, was down 2.08% or 4.7K. So it was a short trading week given getting Friday off for the 4th of July long weekend. So ended the week at 224.8K here, including the after hours. On the week, you can kind of see that I'm down here 1.04% or 2.3K like I mentioned. And really, if we compared that to VU, right, the S&P 500, VU in the same time period was up 3.54%. So quite a bit, right? So underperformed the market quite a bit here this week, and we'll dive into like exactly what dragged things down once we get to Snowball. But on the month, I'm just slightly down 1.3K or 0.6%. On the 3 months, still very green, still up 32.77% or 55.5K. Year to date, up 22.47% still, or 41.2K. And then if we check to almost nearing a year since I transferred it over to Robinhood here. That happened like in July 7th last year. Still up 48.3K or 27.4%. So again, this is also total returns, right? So Robinhood factors in your gains, your losses, dividends received, any margin interest that gets deducted. So that's all factored in. So this is total return that you see on this timeline here. The only place where you don't see total return is if you go into your like individual positions, right? Say you go to VU, right? It's not going to factor in your dividends and the gains or whatnot. This is just showing VU's chart purely. And even the gains losses here only factor in just gains losses, not dividends or anything like that. Just as a quick note. That's how stuff is looking. If we pop over to my spreadsheet to have a deeper look at everything, we can take a look here. So if we add up all the assets in the portfolio across my growth and on my high yield side, I'm sitting at a 413.8K gross portfolio value, right? So that's all the assets. If we factor out margin, which is sitting at 189.4K, I'm sitting at a net value of 224.4K, right? So the idea behind the strategy is really this gross value is just going to keep growing, right? I basically just want to let compounding do its thing and just never interrupt it. That's the whole goal of this, right? I never want to sell to basically take money out of the portfolio. All I'm doing is actually leveraging margin to kind of pay all my bills and basically just taking a loan against my growing assets, right? And just let the miracle of compounding happen. And if we pop over to kind of the total return side and the unrealized gain loss side, so still green on both sides, which is nice. Definitely inching towards 0% here on the unrealized gain side, but on the total return side, still sitting pretty strong despite the little red days that we've had. So total profit wise sitting at 105.2K, everything included. So that's realized gains, dividends received, and all that against the margin value, or that's a 46.91% gain, which is awesome. And on the unrealized side, sitting at a 14.1K gain or 6.31%. So just slightly in the green there, right? But given that how heavy I am into high yield, it's pretty good. So no erosion there in that sense. Still sitting in the green. Certain positions are definitely eroded right now, but I fully expect these to kind of jump back up. KGLD and copper for sure. GIAX has done a good job like during the Iran conflict to like really pop back up as we've seen, right? Like I mean, even if we go to like Snowball, we can kind of take a look at it here and kind of see from the lows of the Iran conflict, it's definitely popped back up nicely and then kind of been buying as it's kind of dipped a little bit here. And blocks has kind of just got hit with kind of crypto that's been hit in the last few weeks, last few months. Less so than BTCI, surprisingly, but on some days it does get the double whammy of both kind of like the semi exposure it has and crypto. But I expect this to kind of rise back up eventually as kind of crypto and the semi stuff in it jump back up. And then YMAX actually surprisingly back in the green. ULTY just a little bit in the red here. And then ORR still red. ILT just slightly in the red here. I might still buy the dip on this. And then DRAM has just lost a lot of its value over this week. There's just been some kind of semi-weakness this week and there was a big drop. So DRAM got affected as well. So at a certain point, I was up 30% on this. Just something crazy. And then, yeah, that kind of lost all that over this week. I bought part of that dip, but then it dipped hard on Thursday too. So we'll see if maybe this ends up being a good buy next week, depending on what happens in the market. But that's where all the assets are sitting there. As far as how it's split between growth and high yield income, so 200.4K sitting in growth, so that's roughly 48% of the portfolio, and 213.4K sitting in high yield income, so that's 51% of the portfolio. And that's the split there. We'll dive into like the deeper categories there in Snowball after. But as far as my margin health, sitting pretty healthily overall. Again, the gross value, margin used, net portfolio value, these are all the same. But if we apply the blended margin maintenance ratio, so on the 413.8K, you get this margin maintenance dollar number, right? So 103.4K. So this is the value that my net portfolio value would have to fall to basically trigger a margin call, right? So right now, if we minus this out to the net portfolio value, I'm sitting at a 120.9K buffer. So pretty healthy overall. So that's like a 53.89% drop on the portfolio that would have to happen. But again, this is on the net portfolio value, right? I think this kind of doesn't take into account well the amplification that can happen. So I like calculating on the gross portfolio value here. So the 29.22%. And you basically get that by taking your margin buffer and dividing that by your gross portfolio value, right? So basically all my assets, like the whole portfolio would have to have a massive 30% drop to hit that margin call, right? And that's the equivalent of a 53.89% drop on the net portfolio value, right? So you really need to factor in the amplification, which, yeah, generally any gains or losses are amplified by roughly 1.84 multiple, essentially. So say you're up 1% on a day, you're actually, with the margin, you might be up 1.84, but if you're down 1%, you might be down 1.84%, right? So kind of ends up working out that way. But overall, my equity is sitting nicely at 54.22%, so above 50%. And it's been kind of hovering in this range for the last few weeks, even with the ups and downs, which is nice. My buying power is sitting at 85.8K, so you get that by taking your margin total, minusing out your margin used. So this is like cash that I could kind of just take and fully invest in the portfolio if I wanted to. But like I said, I just want to keep my margin buffer high and my cash available for withdrawal high as well, which is about half this amount. So 42.9K. So this is cold hard cash I could take out of the portfolio if I needed to in an emergency. But ideally, yeah, I want to just keep building that buffer, right? And kind of steer very clear of a margin call, right? You might notice a little new section that I added this week. And this comes from like the finance video of the week from Almost Wealthy. He was mentioning the LTV ratio in his video. And that was kind of a good reminder just because like in mortgages and stuff like that, we're always kind of thinking about that. So I thought it'd be nice to just kind of get those ratios in here. So generally like a mortgage might go off the gross LTV ratio. So your loan to value ratio, right? So that's kind of taking loan, dividing that by the gross amount of your property value, for example. So I want to do the same for the portfolio just to see where we're at. So right now, if we go off the gross value, my loan to like basically taking the margin divided by the gross portfolio value sitting at 45% ratio, which is pretty healthy, I'd say. It's pretty far from 80%. On the net ratio, I am over 80%, which would be great to kind of get this down over time. So this is sitting at 84.42%. Just figured these would be nice extra percentages to track. I have like a lot of extra percentages here that are just there just because I don't necessarily mention them, but like, yeah, just some extra there. As far as my monthly dividends, I'm sitting at $5,570 a month that I'm making from the portfolio. So this is basically an extra bi-weekly paycheck, essentially, for me. So I get paid weekly now, but like, yeah, if you add up 2 weeks, I'm getting more than that with this monthly dividend, which is awesome. So it's almost, if I was getting paid on a semi-monthly basis still, like my old job, like this would be a third extra paycheck, essentially, which is awesome. Yearly, that amounts to 66.8K, as we saw in the video title and how I mentioned in the intro. Weekly, that's $1,285. And daily, that's $183 coming in. So that really amounts to a 31.32% blended yield. So that's if we take this amount and really only divide it on the yield income assets of the portfolio, right? Since a little less than half of the portfolio is still in growth. So that's pretty great blended yield, all things considered. Definitely some higher yielders, but a lot of lower yielders as well. But if we take that on the full portfolio value, my blended yield sitting more at like 16.72% here. So again, this is not free, right? Like I have this pretty massive margin balance, 189.4K. Like I'm fully cognizant this could make some eyes water, right? But like, I mean, when you consider it compared to our mortgage, right? Like my mortgage right now is sitting at 408.6K on a house that I bought for 540K and has a roughly current value of 606K. So same principles just applied to the brokerage account, right? And so I'm paying a 4.5% interest rate, carry this big margin balance, right? I wish my mortgage was this low. My mortgage is at 5.95%. And then, so basically for that 4.5% interest, I'm paying roughly $706 a month in interest. But with all that margin that I'm carrying, and by that also investing my full paycheck, I'm also making 5.5K a month. So that's a pretty big spread. It's a 4.8K monthly margin spread that I'm making, or 26.82%, which is pretty amazing. So I think for me, like, I know it's a lot of leverage, but that's a pretty good deal considering I'm paying $700 in interest and making 5.5K with that leverage, right? Essentially. So that's where the numbers are sitting at. So if you're interested in my spreadsheet tracker, that's on Gumroad for $5 as well. We pop over to Snowball. We can kind of have a deeper dive on like where the categories are sitting. So I subdivide this a little bit more in here. So I've kind of the ultra yielders here. So anything that yields 20 to 30% plus. So these I kind of consider a little bit less safe in that sense, where like because of their higher yields, their NAV might erode a little bit more. So YMAX, ULTY are in here, and these I've kind of stopped investing in them, as I've mentioned. Like I'm just kind of collecting their dividends, kind of reinvesting them for the most part. GIX and blocks are obviously new, and I'm still investing in these. I'm building those up. Chippy is pretty heavy in this thing. It's like makes up 50% of this category. So if there's a big meaningful dip, I might buy more there. But for now, just kind of letting that be and collecting its income as well. And BTCI, just kind of still connecting that. That's definitely down a lot with just the hit from Bitcoin. Honestly, on some days, I still kind of think of like, I still want to see how blocks does in the long term now that I'm holding this. But I don't know, it might be a thing of maybe I switch this eventually to blocks if I see enough good outperformance from blocks and kind of just see how it ebbs and flows better as I hold it. Because it might be a better play to kind of get the overall crypto and Bitcoin recovery potentially. So we'll see. On the high yield anchors, I'm really focusing on this category this year, right? So really focusing on building up XPAY, TSPY, TDAQ, MLPI, KCOP, BCAT, and Goop, which is my YouTube income earnings essentially. So all these are in the green really. Only KCOP that's slightly in the red here with potential for rate hikes later in the year. And then also just kind of like the Iran conflict popping off again. But just nicely in the green here, up 12.57% or 12.9K and 10.8% or 12.6K on the ultra yielders. And that's really on the back of the dividends as well too, right? But on the anchors here, you can see that this is green as well on capital gains, which is awesome. On the hedge side, so that's OR, KGLD, IALT, CLSE. So yeah, almost all red across the board here, except for CLSE. It's still holding on. GLD got hit as well, similar to KCOP. IALT just slightly in the red, not too much. It's still holding its value pretty nicely and still kind of buying this dip as it happens. And really the hedge category, the goal with this is like it's roughly 10% of the portfolio. And by investing in kind of like KGLD and then also long short equity ETFs, the idea here is to kind of just really reduce the volatility and the beta of this 10% of the portfolio, right? So I kind of want this to kind of just stay relatively stable in this kind of like 44K, 46K range, right? This is kind of my way of doing like hedging in a way. I don't like doing the buying the put insurance. I tried that for a few months and I just didn't like the feeling of like buying insurance on green days and just feels like, or in green months, it just made me feel like I was kind of throwing away money, even though I know that's the purpose of insurance. Personally, I'd just rather just take that $200 a month that I was doing and buy actual assets, right? So that started doing that with KGLD, and then I'm still investing in like these other long shorts as dips happen. And then also for less than 50% of my portfolio, this is just my growth and dividend growth anchors, right? These are just all doing amazing, all very in the green, right? So VU, VGT, SPMO, SCHD, QQQM, DRAM here, which is lagging a little bit behind. So it's definitely taken a big dip here. You can kind of see there. So I might maybe buy a little bit more because it's kind of getting to be below my initial buy range. We'll see. I'm just going to keep an eye on it. There's a lot of stuff floating around there with the lawsuit and everything. But like we're seeing, like the memory shortage and storage shortage is really real. Like we're seeing it across like Apple, Microsoft, Sony, like raising prices of hardware, right? Because of all that, the Valve with the Steam machine. So it's definitely there. And I don't necessarily think it's like price fixing. I think the lawsuit, reading a little bit more about it, like seems a bit frivolous to me. It kind of just seems more like they're upset because the prices are so high, but they're just kind of going where the demand is with like all the AI stuff, right? Like it's not really price fixing if they're just following the supply and demand, right? But that's where the categories are sitting. And if we go to the growth tab to kind of compare it to the S&P, so we can kind of see like the numbers again just shift a little bit from what we saw in Robinhood, but it just shows the overall trend where like, yeah, I was outperforming a little bit during the week, and then as it fell, kind of fell a lot harder. So you really saw like both ends of margin amplification, right? The positive here and then the negative. So definitely a lot more riskier and a lot more to kind of keep in mind. And that's why I kind of checked my margin health as well. So this whole thing is definitely not without risk, right? It's not for the faint of heart. Really make sure you understand margin and really read up on it and research it and feel it out before you really go in heavy. So just down 0.21% according to Snowball, but yeah, it was a little bit different in Robinhood there. But on the month, just slightly in the red there, or quite a bit in the red compared to the S&P. On the 3 months, still positive. On the 6 months, still positive. Year to date, still positive, over double. So kind of fun to see where it ebbs and flows. So it was outperforming for a bit, underperforming for a long while, and then as it's kind of really gone up, I've shot up a lot with it. So yeah, that's where the portfolio is sitting at. If we check on the heat map for the week, so we can kind of see that was very lumpy, kind of very red on some parts, very green in some others. So SGHD held on nicely. There was just basically kind of like a big rotation from kind of like AI and tech to more value names. So SCHD reaped some rewards there, and always happy to hold SCHD, I think, just because of how heavy I am in tech, right? Like it's nice to kind of counterbalance that a little bit. Chippy just got hit quite a bit from semis taking a hit this week. The dividends helped offset that a little bit. SPMO, all the momentum names went down a bit. XPAY just followed along with VU, but not as much. ORR held up nicely. Oil went down. So I think like there was maybe another peace talks in play. So the oil prices went down. So this goes down along with it. QQQM, yeah, up 0.85%. TDAQ didn't quite match it, unfortunately. So we can kind of see that there. And then TSPY just captured a little bit of the gains from the S&P here. CLSE down a little bit, GIX down a little bit, DRAM down a lot here, 15% like we said. Google was up a lot this week. I didn't quite read what news caused this. And also YMAX actually kind of got close to matching VU. ULTY underperformed. So yeah, you kind of see across the board how that's all looking. If we check in year to date, still very green, right? With kind of like little hot spots of red there. So all good potential areas to still buy the dips on for my weekly investing. So kind of keeping an eye on those as I invest every week. And like I kind of show on the paycheck investing thing, love using the little find a dip tool here across different timelines. Like if there's a particularly bad dip, I kind of maybe just want to buy what's there that week. But I might also check the 50-day, check the 100-day, or potentially the 200-day, right? So really varies depending on the week and like kind of dip that we had, right? As far as the dividend calendar this week, it's a little bit of a slower week, but still pretty good. This goes across June and July, but had like $463 come in on Monday. So $44 from Blocks, $19 from GIX, and then $398 from SCHD for its quarterly dividend, $58 from BCAT on Tuesday, and $40 from VU. So roughly that was like $550 that came in on those last 2 days of June. And then $73 came in from TSPY at 14% yield, $430 of Chippy at 44% yield. It's $177 of ULTY at 62% yield, and $113 of YMAX at 47% yield. So roughly that's like a little over $1,300 by my estimate for this week, which is awesome. Over the month, it's looking like we're estimating to roughly get 5.8K this month, which is great. So about matching where we were at last month. We'll see if through the investments we can kind of push that a little higher potentially this week. But that's how the month is looking for dividends. It's going to be a nice 5-week month. So that's why it'll be a little bit higher this week or this month for the dividends, which will be nice. And then also just paycheck wise too, right? That means I'm going to get 5 paychecks this month. So even more investing, which I'm excited about. If we dive into the dividends proper here, we can kind of really see, yeah, month over month. Well, in June and July, we're pretty much in line to beat that. So it's going to be, it was 4.4K last year. And then this year we're looking at 5.8K. So really see like just kind of the year over year compounding of like all the investment I've been doing, right? Even with like kind of the dips we had and everything, it's still holding up nicely. And really here, as far as the yield on cost, you can kind of really see again, like why I'm investing in this middle part here, right? Like these are all holding their yield a lot better, their yield and their NAV. So yeah, really focusing in on these guys this year, less so on ULTY and YMAX and things like that. Chippy and blocks I might still buy, but I kind of really see, for example, how ULTY, I got a 62% dividend this week, but really for all the capital I have invested into it and just how much ULTY has eroded, right? My yield on cost is kind of more on that new capital essentially for against the yield. So that's sitting more like a 35% yield, YMAX 47% this week, but more of like a 28% yield on cost. So that's the big difference there. And that's the dividends this week. As far as portfolio thoughts, nothing major. I think I kind of mentioned that quick one where I'm kind of keeping an eye on BTCI and blocks and seeing if maybe it might be worth consolidating these two eventually, like basically do BTCI and put into blocks, maybe just kind of take some of these losses here. But you're kind of keeping an eye on it. I want to just kind of keep an eye on blocks as I keep investing into it a bit more and see how well it handles those upswings. I think it should, in theory, handle it better than BTCI. And plus it has a little bit more nice diversification there. But just keeping an eye on it, something I'm keeping in the back of my mind over the next few months. Other than that, no major updates in the portfolio, just kind of keeping on with what's there. As far as the finance channel of the week, I wanted to highlight Almost Wealthy. So definitely check out his channel. He's just on the verge of getting to 1,000 subscribers. One thing that first caught my eye with this channel months ago, I've been following for several months now, just really appreciated his really clean thumbnails and branding, like just very consistent. Really appreciate like just the clean font and the coloring, something I appreciate just graphic design wise. So really nice job on all that. I think he actually went back and updated a lot of his older thumbnails here, but I came across one of his newer videos this week, and it's nice because he's also living out of his brokerage, but kind of scaling into it gradually, which is nice. And he's come up with a whole framework for it, and he's really building up to it bill by bill. So this is kind of like what I say anytime like someone asks about kind of starting out, just because like I didn't quite start out in that same way, but I did kind of scale into it by just testing it in the waters with like 1 bill and then 2 bills. And then eventually made the big jump. But I already had like a fairly sizable portfolio size at that point, like over 6 figures. But this is interesting because he started it with like 6K. So yeah, he kind of documents like all the different phases he's going through and will go through. So really nice framework. Definitely check it out. It's, I think, a little bit more approachable for maybe someone more starting out with a smaller account size. So definitely encourage you to check it out. I always love spreading the love across other channels here that are doing similar things. So check it out. And I'll link it in the description below and at the top right. So, and that's the video. If you appreciate all this transparency, definitely give a like and subscribe and hit the bell notification if you want to be notified by future videos. If you want to support the channel, best way is checking out the description below. Check all my free and paid links and kind of check out Snowball, which I use. You can check out the portfolio for free, but also register with my affiliate link. And then there's also a Discord. So you can join us for $3 a month through either the YouTube membership or Patreon membership. And yeah, just like great back and forth with people. Lots of people living out of their brokerage in here in tons of different ways. Members sharing their portfolios that you can kind of learn from. So lots you can kind of glean from myself and others. Just a nice little community that we have. And that's the video, and peace. I'll catch you in the next one.